He's Peter Hugg, Kitco's head of precious metals. Peter, welcome back.
Good to be here, Michael.
Peter, another huge helping of volatility this week.
Yeah, I mean, we had a conversation, I think, last Tuesday or Wednesday. Every day seems to be like Groundhog Day here for me. And we were thinking that gold holding the 1925 level would set up for a rally, and silver holding the 25-30 level would set up for a rally. We got the rally starting on Wednesday right through yesterday, when silver got as high as a little north of 28 and gold got over $2,000. And it ran into issues today at $2,000. There was a big seller yesterday that hit the market just north of 2,000, took it under to about 1985. Market managed to rally back over 2,000 overnight. But I think what happened today was there were a lot of longs in this market that have a lot of money on the table, and they were lightening up their positions ahead of the Fed minute announcement today at 2 o'clock. They were just making sure that if the Fed said something different than in the past, that they would be able to take some money off the table. And I think that caused the selling today. And then when the Fed announcement came out and they reviewed the minutes, again, this is old news because, these are minutes from their last meeting. So, a lot's happened since. But there was an expression of concern by the Fed that they were worried about the economy, and that took an edge off the equity market. The Dow was up about 100 and change prior to the minutes being released, and dropped almost 200 points. And I think that scared the metals markets as well, as people basically were liquidating anything they had to generate cash, and that caused the gold market to continue lower, to test the 1930 level, and silver to drop almost $1.30 throughout the day.
Can you break apart this physical market right now? How are we doing with the volatility, and how are we doing with supplies of gold, silver, and PGM?
Well, the volatility is obviously there. I mean, when you see a $1.30 move in silver in a day, and gold is just south of being down $70 on the day from yesterday's close. The volatility is going to be with us to stay for a while. I don't think anything has changed from the perspective of Fed policy, but I think they're a little worried that they don't have a lot of ammunition left. I mean, they're at zero rate. They can maneuver something on their bond purchases, but I think they're looking for some leadership from the government to create more fiscal stimulus. I got the impression that they were concerned, without that government fiscal stimulus continuing, that there could be some risks to the economy, and I think that's sort of taken a little bit of the edge off the easy ride in the equity market, and some of the sales in the precious metals to raise cash. Now, as far as inventory goes, again, the gold inventories are relatively stable. Not that the premiums have come down, but obtaining eagles, buffaloes, gold maple leafs, some sizes of gold bars, especially the larger sizes, kilos, 100-ounce and 400-ounce bars, is relatively easy, albeit the premiums are still exaggerated. On the silver side, we're still seeing a squeeze. Silver Eagle premiums are still north of $8. Silver maple leaf premiums are north of $6. Small bars in silver, the allocations that are coming out of the mints are insignificant to meet the demand. So premiums there on 10-ounce silver bars are still high. 100-ounce silver bars, the allocations coming out of the mints are again insignificant to meet the demand. And the problem with the demand is it's a global demand. So you have the RCM and the U.S. Mint producing product, but it's not only meant to go to the North American market. There's demand for their product in Europe and in the Far East. So when you add it all together, they're just not able to keep up with the global demand picture from retail investors on a global basis, not just North America. So in that context, silver inventories are still sporadic. And basically what dealers are indicating to their clients is just check our site. As soon as we get inventory in, it goes up on our site, and it's first come, first serve. So it's really up to the investor, if he's chasing inventory and he's prepared to pay the premium, to basically be vigilant and sort of look at their favorite dealer site, and as soon as the inventory comes up, to act and to obtain it if that's their goal.
Hard question, Peter, but can you look forward in this market right now? We're in mid-August. This is supposed to be a slow period for us.
Yeah, I mean, historically, if you take the last 20 years, as a benchmark, August tends to be a slow month, but there have been unusual Augusts. 2015, when there was a drop in silver and there was massive retail demand and the mints were closed, we had a surge in the silver price. We had volatility. So there are times when August is not a quiet month. They don't happen often. Last 10 years, it's happened 3 times. This is a market that you can't call normal. I mean, there is no such thing as a normal month. The volatility in these markets will continue, and just because we're in August, it doesn't change the fact. It's not like 100% of the people are working and they're taking August off as a holiday. I mean, most people are trying to squeeze days here and there, just to try to get some relief from working from home. So, this is a totally different paradigm we're in right now, and August to me is no different than any other month. The volatility is here, both in the equity markets and in the metals markets. And as long as the volatility is here, you're going to have participation in the market.
Longer events that we're looking forward to, such as being the election or being more action from the Fed, say, into the fall.
I mean, I think we've seen a lot of volatility, but I think this market is going to be not impossible, but a very difficult market to trade. There are just so many events that could occur on the horizon, notwithstanding the election. We don't know if the equity market is going to go hold up. We're uncertain about if COVID is going to come back with a second wave. We are uncertain as to whether there's going to be fiscal stimulus from the government. There are just so many unknowns. It just does not make sense not to hold precious metals in your portfolio. But again, to trade this market has become extremely difficult, especially if you run an overnight book. Where the markets move $2, $3 on silver. It's an extremely difficult market for traders. But for an investor, this is certainly, in my opinion, not the time to relinquish your protection position in the market. So if you are holding metals from the perspective of a balanced portfolio, this would not, in my opinion, be the time to liquidate. And if you're a trader, I mean, it's a difficult market. You've just got to have very tight stops. But even in these markets, silver's moving 30, 40 cents a pop. It's difficult even to place stops and to protect your position. And I think this volatility will continue throughout the year.
Peter, we understand it's a very, very busy day for you today. We appreciate your thoughts and appreciate checking in with us.
Not a problem, Michael. Anytime.